Good morning, welcome. My name is Stephen Murray. I'm a principal at Cross Boundary, a frontier market focused investment firm, and also a proud board member of the Society of International Development United States, or SID-US. This is the first time I've actually gotten to use our new name, so it's very exciting for us. And it's very exciting also the reason why we've expanded our name from SID Washington to SID USA, or SID United States, because we really wanted to make sure we were getting a more inclusive set and diverse set of voices across the development community. Today, we're going to talk with a number of local voices, people that are not necessarily based in Washington, D.C. or working exclusively in Washington, D.C., but people who are working in the markets where the impact is in the greatest need. The world has changed a lot as a result of COVID. A small illustration of that is the fact that for many years, SID held its conference in downtown Washington, D.C. in person. Due to COVID, we switched to a virtual conference. And this year, and I think for many years to come, we're going to continue to have a hybrid conference, combining both in-person and virtual participants. This way, we get the broadest community, the broadest number of voices, and have the biggest impact and extend the message across many, many geographies and territories. All of the speakers today have been living in this hybrid world for most of their careers. They've been dealing in the world of blended finance, bringing together public and private capital towards meeting their organization's goals. So this is something that they're very used to. Hybrid is not new to them. This is the world that they work in and the world that they are most comfortable in. So on behalf of SID-US, thank you for joining us today. I'm going to hand over proceedings to my colleague, Cheesy, who is also a fellow board member, and she will introduce our moderator for today. Cheesy, over to you.
Sure. Thank you, Stephen, and good morning. As you mentioned, my name is Cheesy Igwe. I am a board member on the Society for International Development Board of Directors, and I also serve as co-chair for our Young Professionals Network. I currently work at the Greater Washington Partnership, and I serve as the manager for our Inclusive Growth portfolio. And I have the privilege and honor of introducing Kusi Hornberger, who will serve as the moderator of the panel. I've had the privilege of working with Kusi earlier in my career, and he is someone I look up to and is very knowledgeable about all things development. So Kusi, he is a partner at Dahlberg Advisors, and for those who may not be familiar, Dahlberg is a social impact consulting firm with offices across the US and across the world. And the firm focuses on strategic analysis and uses their rich network to address social impact challenges in emerging and frontier markets. Kusi is a partner and also serves as one of the knowledge leads in our DC office. He also co-leads the finance practice at Dahlberg Advisors. Kusi is passionate about many things, but amongst a few of them are innovative financing, the use of technology to address SDGs. Kusi's work crosses the intersections of a number of sectors and industries with an emphasis on agriculture, financial services, and agriculture and global health. So with that, I will turn it over to Kusi to introduce our panelists and to get us started. Thank you, Kusi.
Thank you, Cheesy, and thank you, Stephen, for the introduction. It's an honor to be with all of you this morning. I'm delighted to be moderating a distinguished panel we have today to share you some local perspectives on the practice of blended finance. We're going to have three panelists. The first panelist is Richard Ambrose, who's the managing director at Pomona Impact, based in Antigua, Guatemala. We have Las Pereira, who is the managing partner of the Development Guarantee Group. And we have Andre Simon, who is the CEO of Finca Impact Finance. Thank you, Las, Rich, and Andre for being with us today. It's a delight to have this conversation with all of you. What I want to do is actually give each of you an opportunity to get to know your individual organizations and work first before I dive into some more interactive questions. So I'll start with you, Rich. Can you give us a brief introduction? What is Pomona Impact?
Thanks, Kusi. It's great to be here with everybody. To quickly describe Pomona Impact is we've got an investment group and we have a foundation. As investors, we invest in early growth companies across Central America, primarily in agro-processing, basic services, and the digital economy. We are targeting a $30 million fund that we're in the process of closing, and have been actively deploying capital that was put in through the first close of the fund. The other side of the coin is the Pomona Impact Foundation. I'm still directing the foundation, and the idea with the foundation is really to help companies prepare to engage investors. And so it works very closely with the fund. I think this is a model that we've seen on a number of occasions in particularly emerging economies, where there's an acceleration arm and an investment arm working in close collaboration to prepare and engage entrepreneurs that are a little bit early, and then ultimately, when they're ready to receive investment, be able to deploy the funds. Our entire team is based in Guatemala. Again, we service the Central America as a region, and really hope to keep growing that. Thank you.
Thanks, Rich. We'll be excited to dig in and learn a little bit more in a moment's time. But first, I want to introduce, or let Las introduce himself and the organization a little bit in more detail. Over to you, Las.
Thanks, Kusi. So the Development Guarantee Group is a collaboration between its management and the Cardano Development Foundation, based in the Netherlands, which focuses on financial market innovation. Essentially, our mission is very much around trying to encourage more use of guarantees to mobilize global capital markets and private capital to address sustainability and development challenges. One of our current focus is on an initiative called the Green Guarantee Company. And everyone's heard about the exponential growth of the green bond market at the moment in the world. It's over $1 trillion, but less than, I think, 2% of that is actually going into developing countries. So our mission is really trying to use guarantees to help mobilize more capital from those global capital markets in there.
Thanks, Las. I'll be excited to dig in. That's a great statistic. Less than 2% of guarantees are going towards, what you said, developing economies. So I'm looking forward to learn more how you're going to change that. Last but not least is Andre. Over to you.
Well, thank you. First of all, thank you all so much for having me here in this conversation today. I run a network of microfinance banks around the world in 17 countries. We focus on serving people who are entrepreneurs, most importantly, who are living at or around the poverty line and are starting their own businesses. So we have about 3 million clients around the world, a loan portfolio of under $1 billion. So they're pretty small loans. The organization has evolved a lot over time, and it's really exciting to be part of a conversation that is around, how can we be more innovative around the financing mechanisms? Because microfinance certainly started dependent on grants and has evolved to being pretty dependent on commercial funding. But COVID really hit the balance sheets of commercial development organizations very hard. And I think that, that really for me is why I want to be part of this conversation today, to talk about, how blended capital can help restart those engines. Because what we know is that the people that we are trying to serve continue to need access to capital. They have lost their businesses. They need to restart them. And many of them don't have the ability to access that funding digitally. So there's a lot of work for people like us to do to help to kindle that flame and get those businesses restarted.
Thank you, Andre. Fascinating. I heard 3 distinct use cases for blended finance in the introductions, and we'll be digging in further. We heard a little bit about Rich and the foundation and how it's supporting early stage ventures be investment ready. Last with the guarantees, and Andre on using sort of blended finance to support companies through COVID, right? To have an opportunity to survive and thrive. So we'll be digging in. But my first question is going to go to you, Las. The theme of the conference is inclusive development, a healthy and prosperous and resilient planet for all. How is climate change impacting your work, and how are you positioning your organization to mitigate the impact of climate change in the countries that you're operating?
Excuse me. So it's quite interesting in that, as I mentioned earlier in my introduction to myself, really that we are seeing a lot of people talking about climate today, particularly in the global capital markets. But actually, if you look at participation, particularly for developing countries, it's very, very low. And a lot of people talk about the $100 billion target that developed countries set themselves, way back at I think it was COP19, or maybe even before that. But fundamentally, they missed the target. They were supposed to hit it in 2020. You could argue COVID had an impact on that, but really, I don't think they were going to get there anyway. So now developed countries are saying we'll get to the 100 billion target by 2023, 2024, perhaps. So that's the thing. There's just so much uncertainty around it. But fundamentally, developing countries saying, hey, if you want us to get there in terms of transition, we need the money now. And one of the things that we've seen work a lot, and actually, the US has been a poster child for this. In the 60s and 70s in the US, municipal infrastructure was not an investable asset class as far as the capital markets in the US were concerned. But the emergence of monoline insurers in those decades, by providing guarantees, they built the capacity of investors to understand how to invest. And now pretty much all infrastructure in the US is being financed by the capital markets and without guarantees. And I think that's where we see an opportunity here where, the global capital markets have trillions of dollars available, but they're just simply sitting on the sidelines saying it's too risky or too scary for us to go into developing countries. So by using guarantees, we're hoping to basically open their eyes to the opportunities, to provide them with an airbag, if you like, if something does go wrong. But fundamentally, it's just address that information asymmetry that exists at the moment. And that's probably impacting all the businesses of my colleagues as well in terms of having commercial finance come into their businesses. So from a climate perspective, we are positioning ourselves to really be the fulcrum of trying to mobilize greater amounts of capital from the global capital markets and the private sector to try and meet that $100 billion target sooner rather than later.
Thanks, Las. How exactly does it work? Can you break down a sort of a specific use case or an example of how a guarantee would unlock financing for a climate opportunity?
Sure. So fundamentally, let's think about it simply. What is a guarantee? It's a promise to pay, right? At its simplest, that is what it is. And essentially, what we do with the guarantees, we will get an international credit rating from Fitch, Moody's, or S&P, one of the large rating agencies, and typically that will be an investment grade rating. And what we're basically saying to investors is that by providing you with the guarantee, you are assured that you are investing in something that's investment grade, because if the borrower in the developing country doesn't pay, we're going to pay you, right? But let's go down a level deeper into why this is a really great blended finance instrument. The ability to leverage our equity. So in the case of the Green Guarantee Company, we have the potential to leverage 10 times. So $1 of equity can write $10 of guarantees, right? And that can mobilize $10 of capital from the global capital markets, which will go into a project and it thereby potentially mobilize other capital as well into that project. So the impact is significantly amplified, and that's really truly blended finance at its best, in our opinion. So, but the key elements of any guarantee company are essentially obviously having a liquidity base that we need, so a base level of capital, but then having the ability to get this credit rating that allows us to leverage that to the maximum possible.
Great, thanks for providing that extra detail, and I love the terms you use, sort of leverage and creating $1 in could create up to $10 in terms of financing flow. Andre and Rich, or first turning to you, Andre, anything you want to add on this theme of how climate change is impacting your work, or given what Las just talked about?
Yeah, I'll build on what Las was saying. I think, certainly in our experience, we can see pretty concretely that there are some hurdles particularly for poor people in terms of addressing climate change effectively. And the tools that we want to use, such as insurance, are very difficult to deploy to very small clients in particular. And so, there's a really strong role. The insurance companies are maybe not as incentivized. They don't see an opportunity to serve the large group of clients that they need to serve in order to manage the risk effectively. And so there's just a tremendous opportunity for small subsidies, I think, for capital like the guarantees to come in and help to defray the costs for those individual clients so that they have that experience of the insurance once and then see the tangible benefit of it. I think, that example has been one that's been incredibly effective when we've tried to deploy insurance in other instances. And then I think, for us, climate clearly has a very strong relationship to food security. And so I would say in that instance, it's not just that this would be a good thing to do, but there's an imperative for all of us that exists around how we address food security and in particularly how we improve the yields of smallholder farms to achieve a better and more robust world for everyone. So I think there are a lot of use cases.
Thanks, Andre. And Rich, would you add anything from your perspective?
Yeah, I would say, it's really the opportunity to generate impact in the region, and we are a generalist fund. We actually work and pursue a variety of types of impact, and this one is the one on the climate finance side and kind of helping companies in this adaptation process. Is one that we've had to become increasingly involved in, and represents a great opportunity for us to try to come in and add value. So yeah.
Thanks. Well, speaking of, I guess, food crisis and a healthy planet, this pending crisis that I think is anticipated is coming on the heels of COVID-19, right? 2 years of lockdown, of all different types of frictions in global markets. And is really a pressing concern globally, whether you work in development or you don't, right? I think particularly it has raised all sorts of issues in international development and for the finance flows, et cetera, including long-term effects. What have you seen? I'm going to ask this question to you, Andre. What have you seen in the markets where Finca works, and how are you seeing those effects being sort of short-term versus long-term, and what do you expect to endure?
Yeah, thank you so much. So, we actually surveyed our clients during the COVID crisis pretty extensively because we wanted to understand what the impact was. And we saw, 2/3 of our clients really struggling with their household incomes. We had 1/3 of the households had to reduce the number of meals that they were eating just to make ends meet. And that was not just in sub-Saharan Africa, but also in the other geographies that we work in. Half of our clients had to deplete their savings in order to buy basic things like food and medicine. So, clearly there was an erosion of savings and people moving into a more precarious situation. What we have seen coming out of that is that a lot of the capital flows that normally, have been making those engines work have gone to other needs. And clearly, there is a need to stabilize at the macroeconomic level, but the clients themselves have also been hesitant because there is large uncertainty in the markets that they're in. So I think there is this situation that we're dealing with now where everyone wants to move beyond this crisis. People have to eat, they have to get their businesses started again. But there's a lot of concern over what's going to happen with the capital flows. How do we make sure that the commercial lenders who were deeply invested in these very volatile economies before come back? How do we make sure that the capital bases of these institutions are actually robust enough to be able to withstand further shocks? Because clearly, COVID was one thing, but then on top of that, we've had the Ukraine crisis, and that has also put kind of a secondary dampener on what people can do. So I think, for myself, I'm an eternal optimist. I think there's just a world of opportunity for us to help, particularly small business holders. But we do need to make sure that we are helping to rebuild those capital flows.
And a follow-up on that. So we need to rebuild the capital flows. How will blended finance help in the case of Finca?
Yeah. Well, even during COVID, a lot of the guarantee funds were essential to keeping commercial funders invested and interested in working in these countries that we work in. And I think that that's going to continue to be necessary in the near term, certainly, and I would say even in the longer term. And if we think about the evolution of international development, we can't say this is a job that's been done. Right? We're not at the end of it. There are still 1.7 billion people out there who need access to financial services. And the guarantees in particular, I think, are going to be essential to helping us to maintain that focus on all of these social elements, climate, gender inclusion, that we really need to move in order to create stable societies.
Great. So guarantees, just in general, we need more concessional funding. And couldn't agree with you more that we have to step up as a community practitioners. Rich, anything you want to add from your perspective in terms of how COVID has impacted both short-term and what do you expect will endure in terms of changing priorities, in terms of business model, and if blended finance can play a role?
Yeah, and I just really applaud what Andre is doing in terms of trying to rechannel and attract more capital flows to those that they're working with directly. In our case, I think we're a much smaller fund. We have a portfolio of companies, and interestingly, it's generated an opportunity to make a name for yourself as a value-add investor. And this is something that a lot of investors talk about. It's often, of course, much easier to talk about it than actually bring real value to the company. But in the case of the crisis that COVID has brought, has really put us in the position to roll up our sleeves and get in the trenches with our portfolio companies. And you've got to do very detailed cash flow modeling and planning, and also encourage them to think. This took a bit of a process, but this isn't a 3-month thing. This isn't a 6-month thing. This was much longer term. And so once we were doing kind of this individualized kind of strategy sessions with these companies, then we had to talk to specific investors and try on a very direct level to unlock more capital to the portfolio companies that we saw had a bright future. And I think from Pomona's standpoint, it was a great exercise in terms of being able to solidify the value proposition that we talk about with our investor companies. And I think in many ways we would love to do a lot more. And I think with blended finance, there's an opportunity to build slightly more robust teams that can really go in and provide more of these tailored value-add services to these companies, because they're certainly needed. But that's something with the model that we still have to keep it pretty lean, and we don't fully incorporate. But I think there's a real opportunity to keep building on that.
Thanks. I can't resist. There's something I want to just mention. It's something that's top of my mind. Is I think the digitization trend, particularly for small businesses, is something that will endure through COVID. It's an accelerant, right? It was already there, but it's accelerated rapidly. I was looking at some data. Something like 90% of all, or 96% of all new small businesses in Europe are digital first models. That statistic blew my mind. So are you seeing that in Central America? Are you seeing more digital first type business models come across your radar?
Absolutely. And that's a very specific skill set that we would love to have more direct access in-house and be able to have someone working with our portfolio companies, but also just more broadly to support that transition, because that has absolutely been an accelerant even in regions that are a little further along on the curve in terms of the digitization process reaching it, and really great way to help companies in that process.
Great, thanks. And last, any thoughts from your end of any enduring trends from COVID that affects, I guess, your work and affects, I guess, the people we're trying to serve?
Well, I mean, I can only really echo what my colleagues have said here on the panel. We are, I mean, in terms of what I'm doing now, we're starting up a new business, but for my previous guarantee company that I was running, we had to, we're spending a lot of time, as Richard was saying, helping people work things out and to try and just help people navigate the different issues that have come through. So I think that's going to take time. I think what Andre was saying around where the role the guarantees can play was something that my personal experience I would agree with. We have been having to issue more to try and keep people on in business. So I don't really have much more to add, really. I'm just, apart from agreeing with everything they've said. So
Great.
Awesome. So Kusi, if I could jump in really quickly, because you said the word digitization, and I'm not short on opinions, as I know everyone has guessed by now, but I think that it's clear that technology is going to revolutionize everything in finance in particular, and it's really exciting. And I think from a development perspective, it offers us so many opportunities, and we are chasing the digitization train just as fast as everybody else is. But I think that we have to ground ourselves in the reality that 2/3 of sub-Saharan Africa does not have mobile internet. Most of the people who are at the lowest end of the scale cannot afford the digital access that we take for granted. And so one of the challenges for us as development professionals is, we cannot be more positive about digitization and frankly about commercialization, because those are things that will ultimately transform how we serve all of these people that need access. And at the same time, we have to be really sober about the reality of it, which is that people are not getting what they need. And if all of the capital goes into digital type things, it will serve middle class. It will serve people who are already beneficiaries of access, but we may not yet be at that tipping point. And that's not the case in all of the places, but it is the case in some of the places where we may not be at that tipping point where putting the money into straight digital interventions is going to serve the people that we are trying to serve when we're talking about development. And I'd love to see more conversations about that.
But if I can just ask the question, isn't there a necessary trickle down effect?
So what's happening today, I think the answer is, of course, ambivalent, right, or ambiguous. What's happening today is that the cost of access to digital connectivity is still prohibitively high for a lot of people. So it is not yet trickling down. The access point ends because people can't afford to actually access the mobile internet. So there is a solution that has to be put in place from an infrastructure perspective in order to make sure that everyone is on equal footing. That's one piece. The second piece is that the cost for most poor people of using digital financial services, they still have to convert into cash, and they have to put cash back into the system. And it's actually really expensive to do that. The fees proportionally are really high. So if we're talking about the ecosystem that we need to transform, and this is where technical assistance and blended capital can really have an influence, there is an ecosystem that has to be built in order to make sure that it is fully inclusive. And if we don't take that into consideration and make some of those investments in parallel, we could be designing solutions that aren't ultimately going to really reach the people that we want them to reach.
I'm going to jump in here. I don't want to just focus on digitization. I think it's a theme unto itself, and Hurt certainly has. I think some of the things you raised, Andrea, are very important, right? You have to have the basic infrastructure to make it relevant. In some places we don't have, we haven't reached that point. But there's a theme around, you made the point around technical assistance, and that's one type of blended finance, right? Combining financing with technical assistance, either pre or post investment, either directly to the portfolio companies or to the fund managers or investment vehicles themselves. Rich, I want to turn to you. Curious what your perspective is on what type of blended finance have you found useful? What type of technical assistance is one variety. We've heard about guarantees, and other varieties, first loss funding or different types of return expectations within the capital stack. What type of blended finance have you seen useful with what types of outcomes?
Yeah. So I've worked in a number of organizations. I had the opportunity to work at OPIC back, this is many years ago. Latin American Partners, which had a large mezzanine fund, and then really Pomona. So we've seen a lot of different versions of blended finance with funds, and I think the first loss structure can be very helpful in some cases. Speaking from Pomona's perspective, this was something that we took a lot of time considering in terms of which what types of kind of blended finance structures are of most interest to us, particularly given our size and the markets that we operate in. And what we came away with is, instead of pursuing the first loss tranche, which I think is very interesting, particularly for larger funds, we're a smaller fund, regional, and oftentimes first loss, the costing is very different and the treatment can be different per country. So it can be a little bit more difficult on a regional level. We instead decided to really focus our support capital in acceleration work and pipeline generation. And so, so again, we have this $30 million investment fund targeting Central America, but the foundation and the relationship with the Pomona Impact Foundation is vital, and a lot of it is to drum up investment opportunities. And again, this is largely done through acceleration incubation activities, and so that ended up being the choice route. Just given the constraints of the fund, a lot of it are cost. You don't have the opportunity to add too much sophistication to the investment vehicle, just from a cost perspective, and then also it makes it a little more difficult just on a regional level to leverage that first loss model.
Follow up on that.
Yeah.
I've spoken to a lot of fund managers who see sort of taking blended or concessional capital as a knock on their model. They want to be commercial. They want to be perceived as, being able to do it all, get the returns, etc. Is that a perception? Is that perception real? And how do you? I mean, it sounds like you struggled with it a little bit as well. You wound up finding a foundation on the side to do the sort of the non-commercial activities.
Yeah.
What are your thoughts on that? Is blended finance useful?
I mean, it's absolutely useful. It's absolutely useful. I do think trying to attract investment capital with a concessionary financing model, we've struggled enormously with that, to the point that we really repositioned our fund thesis to generate, to pursue more market rate returns. That said, of course, we built out this infrastructure. We recognize the state of the ecosystem across Central America was still very young. The challenge of building pipeline was going to be enormous, and we couldn't put that on the balance sheet of the fund manager. It just would be too costly. So we launched a foundation, and we've been able to find a number of partners that recognize the benefit of having this vehicle that's working in close collaboration with the fund to prepare companies to be ready to receive investment as a real service that adds value. And I think inherently the structure lines up very well. They are naturally synergistic. And I think the other side, smaller funds, particularly when you're looking at in smaller emerging markets, fund sizes correspond to the size of the markets they're oftentimes serving, so they end up being quite small. And so the cost structure, the budgets are just extremely thin. And as a result, it's very important to have either technical assistance serving the fund directly, or alongside through a foundation vehicle to do some of these services that I would say in a traditional model might be incorporated in a pure fund structure, where a fund is responsible for drumming up its own pipeline 100% of the time. So
great.
Yeah.
I'm going to cut you off there just because we're short on time, and I have a few more questions for each of you. But that last point really resonated with me. In a constrained context, in some cases, you're going to need a little bit of funding to make the basic infrastructure work. And so blended finance can play a role to help make that work. Last, I want to turn to you. We think often of blended finance as public sector capital de-risking investment, and sort of the logic you just laid out of leverage, 10 to 1, sort of $1 of equity in, $10 of capital finance moved. What do you think are other benefits of blended finance? Are there other benefits beyond just capital in terms of the ecosystem, in terms of the outcomes that are generated, and maybe from your experience?
Oh, absolutely. I mean, I think at least from my perspective, the primary purpose of blended finance is to build capacity, right, for the long term. And one of the most powerful examples I can give from my old shop at Granco was when we started working in Nigeria in 2009. Local pension funds and institutional investors were sitting on like $30 billion of capital. They weren't investing a dime in infrastructure in their own country. And as a consequence, Nigeria is borrowing dollars from outside to invest in infrastructure when it had capital it could be using, local currency capital it could be using as an alternative with the use of guarantees. And we actually, in our journey there, ended up building a guarantee company in Nigeria called Infracredit Nigeria. The use of the guarantees there, you now got pension funds investing for 20 years in infrastructure there, and some of those without guarantees at all as well. So, but the use of the guarantee was a catalyst in helping build the capacity of those pension funds to understand how to invest in infrastructure. And then slowly, as their capacity grew, they said, hey, we don't need these guarantees anymore. A bit like the example of the US I was giving you with the online insurers. That is the power of blended finance ultimately, right? It's the getting people to suddenly say, we don't need other people to de-risk us. We get this. We can do this ourselves.
Great answer. I love it. Capacity building. So true. Rich, Andre, anything you would add on additional benefits beyond just finance flows, blended finance? No?
No, I think last covered it really well.
Rich?
I think we're going to talk a little bit on the gender subject, so I'll save it for that.
Well, actually, let's go into that right now. Tell us a little bit about, we haven't had a chance yet to talk about sort of the equity and inclusion aspects and how blended finance can play a role in helping capital flow to address, deep inequities, particularly in the developing world, right? We often focus too much on our own context in the markets we live, but actually the inequities are global, and each context has their own set of inequities. So how is Pomona, I guess, what is Pomona doing in the case of gender in terms of how it invests and how it takes an inclusion lens?
Sure. So Pomona did a pilot fund, took 5 years to do a small pilot fund in Central America, invested 35% of the portfolio companies, 7 of 20 were women-led, and that's a very high percentage in the region. And we were feeling, very good about ourselves about not putting, just looking at opportunities at equal levels. But then we had some conversations with interesting partners in the space. We ended up working with Value for Women. We actually had services working with Value for Women was funded by a grant. And effectively what that engagement allowed us to do was formalize our gender inclusion strategy. And this is something that when this is not an activity that we would have self-financed. Again, very limited on the budget. But what's exciting about this blended finance approach is that it allowed us to really strengthen the impact that our fund is very well positioned to deliver on. So with this gender inclusion strategy, of course, we're looking on the screening side, trying to make sure that our investment pipeline is equally balanced or has a strong proportion of women-led businesses versus men. And you're also looking at with your portfolio companies, making sure they're very comfortable working environments for women to be working in some of these businesses. And so it was really, I think this engagement really allowed us to lean into that drive that type of impact in the portfolio companies that we're ultimately serving. Funds are very well positioned to actually be important paradigm changers in industries in particularly Central America or just small markets, because you are in a bit of the position to push through whistleblowing policies and better representation on board of directors, and strengthen governance with kind of a gender lens view. And so we would just highlight that in the funds case, the support that we received really helped formalize our gender inclusion strategy. And I think this is something that not only serves now our fund, this is something we've become a spokesman and been sharing our strategy with other funds, and I think is only growing in the region.
Great answer. So it was that technical assistance to your organization that allowed you to take a more clearer focus on how you would implement a gender inclusion strategy and practice, and then sort of drive agenda setting with the organizations that you invest into. That's amazing. Andre, anything you would have had? Sounds like absolutely. Yeah, go over to you.
No, listen, we are very passionate about gender equity, and not just outside of our organization with our clients, but actually internally as well. And, clearly what we know is that it's actually, women have better credit risk, but they also typically are not as educated about financial services as their counterparts. And so there is implicitly a need to offer services to women in a way that is fundamentally different than the way that we offer them to men. And it has helped us so much to be able to experiment with, for example, female-only agents in Congo that actually helped to enroll more women clients for savings products, or offering women-only branches in Afghanistan that actually became profitable faster than men-only branches. But dedicating the resources is difficult to do when you're under commercial pressure to perform. And so having a little bit of latitude and freedom to do those experiments, because let's say, honestly, not all of them are successful. But to see how you achieve that greater impact, like Rich was saying, I think, that is really powerful, and it's how we all get better.
I couldn't agree more. Lass, any thoughts on this topic from your end?
To be honest, it's a challenge that we are looking at quite closely, because from Andre and Rich get to see it really at the coalface. We kind of have to look at it from the helicopter level, at global capital markets level. And the challenge is, how do we know we're going to have that impact from a gender perspective? How do we really get there? And in part, the solution is to work with people like Andre and Rich to make sure we are channeling the funds to the right place and to the right institutions that can do good with it and apply the gender lens appropriately. But it is an issue, because institutional investors are asking these questions as well. They really are saying, we want to know our money is going to be invested with a gender lens. And so I would love to say to you, I have a solution, but it is still a work in progress that we're focusing on. But it is key, and I think it is something that isn't going to go away. So hopefully a solution will present itself sooner rather than later.
Fully agree. I have a couple of lightning round questions, but before I do that, I want to sort of summarize a couple of the themes I've heard. I've heard sort of three different models on how you're using blended finance in different ways. I've heard about guarantees, technical assistance, different types of concessionality. I've also heard how the benefit of blended finance is beyond just the financing and leverages, although that's really critical. It's also about agenda setting. It's about capacity building. It's about demonstration effects. It's about rebuilding markets, et cetera. Just on that end, we actually did some work with USAID last year to develop a learning brief on additionality and human impact, and how blended finance plays a role in creating human impact and additionality. And we tried to push the paradigm. There's always this conversation just talking about financial additionality, but we talked about ecosystem additionality, about the consequence of what blended finance can do goes well beyond just the leverage it creates, which is important, but it is all the things that we talked about on this panel. With that, I do want to ask some fun lightning round questions. I have 30 seconds each for you. I'll give you one or two questions, but I think this is more in the spirit of we have a diverse audience out there who may want to hear about, three very successful people who made a career in international development in different ways, working in blended finance. First question, I'll start with Andre, go to Rich, and go to Las. First question is, in the current environment, is it easier to raise or deploy capital?
Deploy. Yeah, I mean, look, the reality is that COVID had an impact across the board, and there is a lot of money, but it is looking for, I think, relatively harder to find returns. I think that the fintech market for sure had an impact. And so for more traditional models that are not fully digitized, I think it is harder.
Okay, Rich, raise or deploy? What's harder?
Raising is harder. And so I would completely agree. I think back to the theme of digitization, we've seen a lot of opportunities emerge, really dynamic companies emerge that have showed incredible resilience to withstand COVID and actually are very much investable. And there are not a lot of institutions deploying in Central America. So for us, it's much easier to deploy.
And you, Las, what's easier, raise or deploy?
It's a full house. It's going to be raising at the moment, I have to say. I think the number of targets that investors expect you to hit with one shot is, I'd love to see them do it, but it's kind of that. So we're having to find a way to navigate through all of that. But yeah, it's certainly proving to be quite interesting and raise money at the moment.
Great. I fortunately, as an advisor, don't have to raise or deploy, so I'm exempt from the question. I would say both have been challenging, but I actually was surprised that through COVID, deploying capital was not as choked as I thought it would be. Capital continued to flow and organizations found their way around it. Next question, a little bit more fun. I'm thinking more in the advice column. I'll start with you last this time. So for audience members out there starting their careers in international development and who have an interest in development finance in particular, maybe blended finance, what trait has served you best professionally in this area?
That for me, I think is a really easy one, empathy. You really need to understand the people you're serving and try and understand the problem from their perspective rather than your perspective. And that means you need to spend time in their communities with them, really trying to understand what they need and actually ask them to tell you what the solution should be, and then try and help them create their solution for the situation. That has been our experience. And, I've worked in capital markets from a development perspective. So as I said, I'm more at the helicopter stage. But I generally think it's true at every level of a ecosystem that you need to be able to have empathy with the people at every stage of that. So that has certainly proven to be the key to success from my perspective anyway.
Thank you for sharing, Les. Rich, what about you? What has been a trait that has really served you well?
I completely agree. In our case, just because we are operating out of Guatemala, I think one big one is actually a lot of the technical skills. And we've been doing a fair amount of hiring right now. Really, in some of the initial pre-screening is making sure the technical skills are in place, and sometimes cutting your teeth in a very hard finance organization gives you the opportunity to get those down. But the ultimate differentiator, the way, once you're in the finals of the interview process, I think the differentiation is how well you understand who it is you're actually trying to serve, and it's that empathetic side of things, and your familiarity with the people you're working with.
What about you, Andre?
Yeah, you have to be uncompromisingly stubborn about possibility. We are constantly at the precipice of opportunity, and everything stacks against you sometimes as you leap into that uncertainty around what we're trying to do. But we have made so much progress collectively. When you look at the faces and the expertise on this panel, and we just have to keep on slogging away, and we will get there.
That's great advice. Stubbornness, sticking to it, getting it done. All three of you have done amazing work. I just want to wish you congratulations and thanks for being with us today on this panel. It was a thrill to speak with you just about your perspectives and work experience. So thanks for the opportunity. And with that, have a wonderful day, everyone. Take care. Bye-bye.
Thank you so much. Appreciate it.
Thank you.
Thank you.
Bye.